Last time I made an update about GameStop, I was celebrating the fact that the stock gained 112% in just 2 weeks. But now when we look at the stock, we are back to square one. On my Discord group, which by the way you should join if you're not a member yet, on my Discord group, we were recently talking about GameStop. I said when I first invested in GameStop last year that I'm looking for a 35% gain. It is nearly 1 year since I made that investment, but we are not seeing that 35% gain. The stock is still down. So what does it mean for my investment in GameStop? Did my target change? Do I still believe in the company? Would I still buy this company today? These are the questions we are going to look at in this video. But first, please make sure to smash the like button for the YouTube algorithm. If you are new to the channel, my name is Ishfaaq. I am a popular investor on eToro, where I manage assets for over 120 people. So please subscribe and hit the notification bell so that you don't miss the coming videos. Let's recap the situation with GameStop. Whenever I'm investing in a company, I don't look for a specific companies. I look for market trends, for economic trends. For example, we know that 5G is a technology for the future, so I'm going to look for semiconductor companies. I will look for the cheapest ones that I can find. Same thing with the Federal Reserve System printing so much money. I believe that gold prices will go higher, so I look for gold miners. I look for the cheapest one where the risk to reward ratio is pretty high. And it is the same thing with the new consoles which are going to come out in November. The new PlayStation from Sony and the new Xbox from Microsoft. So there is the possibility of making money from these consoles. Of course, I look at Microsoft, I look at Sony, I look at all the video games companies, and then I found GameStop as the best company to invest with the amount of risk that I want to put in that industry and the reward that I'm looking for. GameStop today is a pure value play. This is a value stock. Many people think that the company is going bankrupt or something like this, but when we look at the balance sheet, they have a good balance sheet. And you only go bankrupt when you cannot repay your debt. You look at the debt of GameStop, they have more cash than debt. So they have enough cash to repay all the debt. And the debt that is required to be paid in the coming year is not so much. They will be able to repay it with the amount of cash that they have on hand today. So that's why the possibility of GameStop going bankrupt anytime soon is not here. Maybe after 10 years, I don't know. But right now, there is no possibility of GameStop going bankrupt. And with this new console cycle, of course, the company is going to make more money because the stock is cyclical, as you can see. Whenever there is a new console cycle, the stock will gain in price. I do agree, however, that this business is failing. GameStop failed to enter the digital age. We are now living in an age where it's better for most people to actually download a game on the internet instead of playing it. But this information that we are seeing, maybe you have seen this chart, that most games now are digital. This doesn't tell us the whole picture because it also includes games that you can play on your smartphone or even on your computer. But this is not really a field where GameStop is competing. Where GameStop is competing is actual video games, where you play on a PlayStation or an Xbox or something made by Nintendo. Even if digital games are becoming more and more relevant today, there is still demand for digital games. Because even the PlayStation 4, the amount of data that it can hold, the storage capacity is limited. You cannot put 100 games on a PlayStation 4. So there are many people who prefer to own the physical copy. And there are people who collect those video games, so they like to have the physical copy. But that doesn't mean that GameStop is on top of the competition, because now we have competitors such as Amazon, Best Buy, and even Walmart. So GameStop is a failing business. I totally agree with you. But nevertheless, the company can still generate cash flow. And this will be enough for us to make a good investment today. Because when we look at the balance sheet, like I told you, this is a very good balance sheet. Last year, the lost money, it was because of goodwill, impairment of goodwill. But when we look at the real cash in the business, the real debt of the business, when we look at the real numbers, how they have been changing their inventories, there is a good possibility that GameStop is going to do great in the new console cycle. There is a great possibility that GameStop will generate more free cash flow than the current market capitalization of the company in the next console cycle. Let's say today the company has a market cap of $250 million US. After 1 year, the company is generating $300 million US in free cash flow. All this cash, the company can use it maybe to buy back shares. If they buy back shares, the shares will go up. There's another option they can do. They can take that money and pay dividends. They pay dividends. They can pay 5%, 4% dividend yield. This is possible if really this happens, that they can generate more free cash flow than the market cap. They pay a 5% dividend yield. Many investors will jump on this company because 5% dividend yield, you're not getting this anymore. So they jump on the company, the stock price goes up. GameStop is the prime example of a cigar butt stock. And whenever there is a cigar butt stock, there need to be catalysts that will propel the stock price. So what exactly is a cigar butt? This is a stock that maybe the business is failing, the business model is failing, but there's still money that can be made on that stock. And investors, Wall Street, are ignoring those money for the time being. But you as an intelligent investor, you who has read Benjamin Graham, you who has read the letters of Warren Buffett, you want to take that opportunity to invest today when everybody's selling this stock. Because when everybody is going to buy, then you're going to sell. So this cigar butt stock, there are two catalysts that can propel the stock price. Number one, like I told you, is a new control cycle. We have seen this. This is cyclical stock. More cash flow means the company can return this cash flow to shareholders. And this is something that GameStop has been doing. Over the past year, they already bought back 35% of all the shares. So they have been returning money to shareholders. And this has created a second catalyst, a short squeeze. Because all these shares, the number of shares of GameStop are going down. But many people are shorting the stock because they believe that it is a sure way of making money. The stock price will just go down. It is a sure way of making money. They will take a lot of leverage to short the stock of GameStop. Now we are in a position where 82% of the shares of GameStop, 82% of shares outstanding are being shorted, and 230% of float of GameStop. The float of GameStop are all the stocks being traded on the exchanges, on the New York Stock Exchange. So all these float, 230% of it is being shorted. So there are more shares being shorted than being traded. This can create a short squeeze. Now you may ask me the question, how is it possible that so many shares are being shorted? I will explain to you because really it looks fishy. If 82% of the shares are being shorted, it means 18% of the shares are long. So 18% of the shares are long. Who are buying the shares? 14% of the company is owned by the insiders. So we have 4% left. 5% is owned by Michael Burry. So we already have 1% more. Actually, what's happening is that those people who are holding the shares of GameStop, because they see that many people want just to short the shares, they are lending the shares to their broker, and then the broker is lending this to the short sellers. Because this is such a sure way of making money that people are willing to short the stock with leverages. That's why we see that there is such a huge percentage of float which is being shorted. But last April, there was a proxy war, which we will talk about in a few minutes, with GameStop. So there were two activist investors who wanted to put their men on the board of GameStop. In order to do that, they needed to vote. And you cannot vote on a share which is being shorted. So you have to recall the shares. So when they recall the shares, you could see that the shares of GameStop were going up. This was a short squeeze. Because when the shares are going up, those short sellers, they will need to cover their position. So when they cover their position, they will have to buy the shares as fast as possible. And the more they buy, the more the stock price will go up. So more short sellers will have to cover their position. So this is what a short squeeze is about. But this short squeeze that happened in April, this is only a small one. I believe that a bigger one can even happen. Now let's talk about this proxy fight, this proxy war. What is it all about? The fight was between the board of directors and two hedge funds who wanted to put their men on the board of directors. And they won. The hedge fund won. Usually when there are activist investors involved in a company, things always get better. Of course, there are exceptions, for example, with Hertz, but there are most of the time when activist investors, I will give you again one example with the best activist investor called Icon with Caesars Entertainment, which by the way, I doubled my money in just 3 months on that investment. So whenever there are activist investors involved in an investment, most of the time things get better. So I believe that these activist investors now, they would want to send the stock price of GameStop higher because they want to make money. So how are they going to do that? There are multiple possibilities. There are multiple options for these activist investors. Now that they have some impact on the board of directors because they have two men there, when we have the situation that the free cash flow of GameStop is going to exceed the market cap, The activist investors can decide to take the company private. They take the company private. They make money. They can even sell the real estate of the company and make even more money. And believe me, the short sellers will want the company to go private. In case there is a short squeeze, the short sellers would want to take the company private at a certain price to avoid the short squeeze. So this is a possibility. Second possibility is that they decide to buy back more shares and repay dividends. If this happens, the stock price is going up because, like I told you, if they pay 5% dividend, everybody would jump on that stock. And of course, there is the third possibility that they are just going to dump the stock after it reaches all-time high or something like this. But I don't think this is the case because I have analyzed those activist investors. Investing in GameStop has taught me a lot, especially about activist investing, about proxy files, proxy wars, about all these things, because before I was not really taking all of this into much consideration. But now I think it is very important to know who owns a company, who are the largest shareholder, who are the other hedge funds who are involved, what are their investment philosophies. For example, there is Michael Burry, there is Ishfaaq Capital, Pyramid Capital. These hedge funds are value investors. And it is unlikely that they are going to hold the stock just to buy today and then make a short profit. I think this is long term. So if this is long term, then maybe they want to take it private at some point, and this will be a good thing for them. But as for me, of course, I don't have that kind of impact on the stock yet. And if I see the opportunity that I can sell it at a higher price, this is what I'm going to do, because I believe that long term, this is not really something to hold. In case it goes private, then you will have to sell eventually. How did I come with that 35% gain, expected gain? I look at different scenarios. One scenario was even the company going bankrupt. One scenario it was being a 10-bagger. I look at all these scenarios to see the different probabilities of them happening, and then I got that 35% expected returns. But I ignored many things. For example, the pandemic, this was not something I was expecting, nobody was. The fact that they would buy back 35% of shares, this is not something I was expecting. But now things have changed. I don't see GameStop really as a 35% returns that I'm looking for till September, because I don't think it will happen. But what about in the future? I don't know. But I expect more than 35% because now the risk on GameStop is much lower. With the amount of shares that they bought back, the possibility of this short squeeze, because when I invested in GameStop, less shares were being shorted. Now there are more shares being shorted. So the possibility of GameStop price maybe becoming a 5-bagger is real. So I'm really bullish on this stock. I don't really have a target now. If I see the stock is cheap, it's still cheap, I'm still holding the company. Once I see that it gets expensive, then I will consider, as per the scenario, if I should sell or not. Because if, let's say, the company is going private at a certain price, let's say $30 a share, and the stock price is $25 a share, I don't think I will sell, even if it is expensive, because you can still make money by arbitrage. GameStop is certainly the riskiest of all my investments, but I have learned a lot, like I told you, by investing in this company, especially about activist investing, about proxy fights, etc. And I also learned about how to buy a stock. When Michael Burry was buying the shares of GameStop, the stock price was going up very quickly, and I took the opportunity to buy more and more shares because I believe it would just go up. But this did not happen. It began falling later. So whenever you are buying a company, if you have a plan to buy for, let's say, 6 months, stick to your plan. It's not because someone else is buying that you need to buy as fast as possible. This is a bad idea. So I learned a lot. I'm still losing money on GameStop because my cost basis is $4.44, and maybe I'm going to buy more if the stock price keeps getting lower. But over the long term, by long term I mean the next 2-3 years, I'm bullish on GameStop. This company will generate more free cash flow over the next 3 years than the current market cap of the company. They can do anything with that money. And since there are many activist investors involved, one priority of activist investors is returning money to shareholders. So I believe this is what is going to happen. So let me know in the comments, what do you think about GameStop? Thank you for watching this video. Please like, subscribe and share. Please watch these 2 videos here if you have missed them. Have a nice day and goodbye.